Welcome to this quick guide on understanding taxes in Denmark. In the next few minutes, we will walk through the key elements of the Danish tax system so that you can navigate it with confidence. Whether you are moving to Denmark, starting a job here, or simply trying to make sense of your payslip. Denmark is known for relatively high taxes, but also for a high level of public services and social security. So it is useful to understand how the system is structured and what you are actually paying for. We will focus on personal income tax, the main tax authorities, typical deductions, VAT, and what to keep in mind as a resident or expatriate. First, let's start with the basics of who pays tax in Denmark. If you live in Denmark for more than 6 months or have your main home and life interests here, you are generally considered fully tax liable. This means you are taxed on your worldwide income. If you are in Denmark for a shorter period or under specific contracts, you may be subject to limited tax liability, usually on Danish source income only. The Danish tax agency, known as Skattestyrelsen, administers the system, and most of your interactions with them happen digitally through the national online platform. Once you start working in Denmark, one of the first steps is to obtain a tax card. This is an electronic record that tells your employer how much tax to withhold from your salary each month. On your tax card, you will see a tax percentage and a monthly tax-free allowance, which is linked to your personal allowance. Your employer uses this information to calculate what is known as withholding tax or A-tax, which is paid directly to the tax authorities before you receive your net pay. The Danish income tax structure combines several layers: a state tax, a municipal tax, contributions to the labor market, and, for higher earners, a top bracket tax. Municipal tax rates vary by municipality, but are broadly in the same range, and they are added to the state tax. On top of that, there is a mandatory labor market contribution, which is a percentage of your gross salary before income tax. This contribution finances parts of the Social Security system and is deducted at source as well. The system is progressive, meaning that higher income levels are taxed at higher rates, though there is an overall cap that limits the effective tax burden. Understanding your payslip is key to understanding how this all works in practice. Typically, your gross salary is listed at the top. From this, the labor market contribution is deducted first. Then your taxable income is calculated after application of your basic allowance and any other relevant deductions. Municipal and state taxes are applied to this taxable amount, and if your income exceeds a certain threshold, the top bracket tax is also added. What you see as net pay is what is left after all of these deductions, including any pension contributions agreed with your employer. Many employees are also enrolled in employer-sponsored pension schemes, where a share of your salary is paid into a pension fund, often on a tax-advantaged basis. Deductions and allowances are an important part of the Danish tax picture. All residents receive a personal allowance, which effectively lowers the income on which you pay tax. Beyond that, you may be able to deduct interest payments on certain loans, union or unemployment fund memberships, and documented transport expenses for commuting beyond a certain distance. If you contribute to approved pension schemes, some of those contributions can also be deducted or receive favorable tax treatment. For expatriates with specialized skills, Denmark offers an expert tax regime under specific conditions, where you may be taxed at a flat, lower rate for a limited number of years instead of following the standard progressive system. It is worth checking if you qualify, as this can have a significant impact on your net income. It is also essential to be aware of the annual tax return process. In Denmark, much of your income data is reported automatically by employers, banks, and pension providers, which means that the tax authorities can generate a preliminary tax assessment for you each year. In the spring, you receive an annual statement, which is a pre-filled tax return showing your income, taxes paid, and deductions. Your role is to review this carefully, add or adjust any missing information, and confirm it. If you have paid too much during the year, you will receive a refund. If you have paid too little, you will be required to settle the outstanding amount, often with options for installment payments. Keeping your preliminary income assessment up to date during the year, especially if your salary changes or you move municipality, helps avoid large adjustments later. Beyond income tax, Denmark also has value-added tax, or VAT, called moms in Danish. The standard VAT rate is relatively high and applies to most goods and services, and it is already included in the price you see in shops. For individuals, VAT is primarily something you encounter as a consumer, whereas businesses collect and remit VAT on behalf of the state. While VAT does not impact your income tax directly, it is relevant for understanding the overall tax burden in the economy. For individuals starting a business or working as self-employed, the tax picture becomes more complex. You may need to register for VAT, make advance tax payments based on expected income, and keep more detailed accounts. In these cases, many people choose to work with an accountant or tax advisor to ensure compliance and optimize their situation. Whether you are an employee or self-employed, good documentation is essential. Keep records of your income, deductible expenses, and any agreements related to pensions or benefits. Putting it all together, taxes in Denmark may seem high at first glance, but they fund a broad range of services, including healthcare, education, infrastructure, and social security. For many residents, the benefits of a stable, predictable system, combined with strong public services, are seen as part of the overall value proposition of living and working in Denmark. To navigate the system effectively, focus on 3 practical actions. Ensure you have the correct tax card from day one, review and update your preliminary assessment when your circumstances change, and take full advantage of eligible deductions and pension schemes. If you are unsure, the Danish tax agency's online tools, as well as professional advisors, can help you clarify your position. By understanding the core elements of the Danish tax framework, you can make more informed decisions about work, savings, and long-term planning, and you can engage with the system proactively rather than reactively. Thank you for watching this quick guide to taxes in Denmark, and consider exploring further resources if you are planning a move, starting a new role, or simply want to optimize your financial situation within the Danish context.